Welcome back to the show, everybody. It's officially a party now. How about Coinbase getting sued by SEC? That may be in the works as we speak, and as we've talked about this on our channel, and it's all about DeFi. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradleyAbove and everything that we're talking about here today. $2.073 trillion for the cryptocurrency market cap. A little bit of money creeping back in little by little. Bitcoin over 46,000 right now. Ethereum at 3,400 plus, just barely. 241 for Cardano and XRP at $1.09, back testing support like a champ. Yeah, let's check it out here. We heard from CoinsKid earlier today. If you haven't seen the first video, it appears we are still on the road to all of those higher prices for XRP, including a new all-time high of $4.40, $4.50 for XRP in the near term if we continue to show the support that it is currently found. If not, we're going to roll over before we go up again. All right, now taking a look at this is a reminder. Ripple's going to be back on the board on Link2, ladies and gentlemen. Make sure you go there, linqto.com. Look, private investing made simple. I tell you guys about this all the time. Yes, you have to be accredited. And if XRP keeps going up the way it does, it won't be long. I think a lot of you hearing my voice will be accredited. And most of you might be accredited now and not even realize it. So go to the website, click on the link, and see what you need to know to get accredited to buy private equity before the companies go public. And we know at some point, Ripple intends to go public. Looking right here, we see Flare Finance DeFi starts Samurai promo ahead of Songbird release. You can feel this getting closer with Flare Networks, a Songbird testnet request or launch that's coming. And then obviously Flare Finance to follow all of this stuff once it comes out with Songbird and we see that the system is working the way it's supposed to. Look, I'm excited about this stuff, but this goes hand in hand with the conversation today. Make no mistake about it. We are getting ready to hear from Brian Armstrong from Coinbase, the CEO, who is saying there is something sketchy going on with the SEC. And I fear a lot of this is leaning into the conversation that I've been having here that has not been really welcomed that much. And it's the idea that the majority of this market, these digital assets, may become digital asset securities. And in fact, when you look at decentralized finance, known as DeFi, this may be the biggest signal that we have that you will be staking your digital asset securities if the SEC and Gary Gensler get their way, because using them directly for payment won't be the way it goes. Let's keep going. Looking right here, the SEC probe on Uniswap. Regulator wants to find out more about decentralized structures. Marketing, the SEC signaled that DeFi or decentralized finance platforms aren't immune from legal scrutiny, launching a civil investigation into Uniswap Labs. Listen, I've been saying this and I've been saying this, and we're going to say it again. And you know what? In just a couple seconds, you're going to hear Brian Armstrong say it. This isn't just about Ripple and the SEC. This is about the entire space and the SEC looking to do a huge power grab here and be able to have the majority of this market deemed digital asset securities. And then from there, tucking those and broadly this market, tucking it into the conventional framework of securities. Now, that would be everything from the dealer broker framework to the compliance side. It's all right there, right? So this is what you can see. This is the big reveal is what we're looking at here, right? We're seeing the SEC really revealing its hand. They have said countless times they want more investor protection. They want to start with the exchanges. Well, Coinbase just recently announced that they were going to offer DeFi on their platform. SEC plans to sue Coinbase over crypto yield program. The exchange announced the program did not launch it yet. I bet they didn't. I bet they didn't. And here is Brad Garlinghouse with his response that says, welcome to the party, pal, in Die Hard style. Absolutely. Because he knows what he's been up against the entire time. Let's go through this because we need to understand from Brian Armstrong's point of view. Don't listen to me, just a YouTuber now. I've been pounding the ground about this market becoming broadly digital asset securities. And obviously they're looking to do the same thing to XRP. That's why they're suing them. Take a look at this. Some really sketchy behavior coming out of the SEC recently. Story time. Millions of crypto holders have been earning yields on their assets over the last few years. It makes sense if you want to lend out your funds, you can earn a return. Everyone seems happy. However, a bunch of great companies in crypto have been offering versions of this for years. Coinbase came out recently and said we would be launching our own version. He says here, we were planning to go live in a few weeks, so we reached out to the SEC to give them a friendly heads up and a briefing. Well, they responded by telling us that this lend feature is a security. Say it isn't so. Okay. Seems strange. How can lending be a security? So we asked the SEC to help us understand and share their view. We always make an effort to work proactively with regulators and keep an open mind. They refuse to tell us why they think it's a security and instead subpoena a bunch of records from us. We comply. Demand testimony from our employees. We comply. And then tell us they will be suing us if we proceed to launch with zero explanation as to why. Oh my goodness. Yeah, old soft-spoken Gary Gensler's just a bully, isn't he? Look, we're committed to following the law. Sometimes the law is unclear. So if the SEC wants to publish guidance, we're also happy to follow that. It's nice if you actually enforce, and even across the industry equally, by the way. But he says, but in this case, they're refusing to offer any opinion in writing to the industry on what should be allowed and why, and instead are engaging in intimidation tactics behind closed doors. Say it isn't so. Whatever their theory is here, it feels like a reach and land grab versus other regulators. And we've been saying this, and I don't mind telling you that while all of this is going on, the CFTC has been sitting their little cheap ass down and ain't said nothing. Nothing. Not Nathan. To no one. There was a federal judge while all this is going on that ruled that virtual currencies are to be regulated by the CFTC as commodities back in 2018. And you ain't heard the CFTC to step up and say, hey, take your foot off my side of the fence because this is where we handle this. You ain't heard nothing out of them, which tells me that all of this is coordinated back behind the scenes, that this is exactly where all agencies have agreed to see this go if we don't see the tide change. Meanwhile, plenty of other crypto companies continue to offer a lend feature, but Coinbase is somehow not allowed. Well, let me tell you, he goes on to say Gensler in his confirmation hearing, it's important for the SEC to provide guidance and clarity, Gensler said. Sometimes that's a clarity that will be thumbs up. And even if it's a thumbs down, it's important to provide that. March 2nd, 2021. If you don't want this activity, then simply publish your position in writing and enforce it evenly across the industry. Well said, Brian Armstrong. Ostensibly, the SEC goal is to protect investors and create fair markets. So who are they protecting here and where is the harm? People seem pretty happy to be earning yield on these various products across lots of other crypto companies. Yeah, but you know, this all comes down to about taxes too, right, Brian? Shutting these doors would arguably be harming consumers more than protecting them, and by preventing Coinbase from launching the same thing that other companies already have live. They're creating an unfair market. They sure are. In May, and it isn't the first time they've done it because we saw them do it against Ripple too, right? In May of this year, he traveled to D.C. to meet with every regulator in the branch of government that he could. And he says here, the SEC SEC was the only regulator that refused to meet with him, saying they were not meeting with any cryptocurrency companies. And he says here, this was right after we became the first crypto company to go public in the U.S. He says here, he spent most of the week in D.C. at the time, back in May 14th, most of the week in D.C. meeting with members of Congress and heads of various federal agencies, along with Ron Conway and Katie Hawn. And I am Paul Gerwal, and he says here, Gensler had been confirmed just a month prior, so he brushed it off as the SEC is still getting its feet under it. Now I'm not so sure. We've always tried to be good actors in this space, leaning into sensible regulation, even when it is difficult or expensive. We try to think about what products we would want for ourselves and what risk we would want our families to be aware of before launching products. We will keep following this approach, yet here we're being threatened by legal action before a single bit of actual guidance has been given to the industry on these products. I tell you, this is really, really dirty, underhanded tactics by Gary Gensler and the SEC. It just keeps getting uglier here. Bullying, intimidation tactics. Why does other platforms out here get to offer these things without any blowback? And now they're threatening to sue Coinbase if they do it. He says, our door remains open. Hopefully the SEC steps up to create the clarity that this industry deserves without harming consumers and companies in the process. America could really use us all working together to figure this out right now. Well, yeah, how about it? And then Mark Cuban adds, Brian, this regulation versus litigation, they aren't capable of working through this themselves and are afraid of making mistakes in doing so. They leave it all to the lawyers, to just the people you don't want impacting new technologies. You have to go on the offensive. He's absolutely right here. And shout out to Brian Armstrong and Mark Cuban for their comments. This points to the larger problem. And then Jim Cramer, who might possibly be one of the worst people you could ever listen to for advice, says here, memo to Brian Armstrong, never pick a fight with the SEC, never. Alicia Haas, CFO, has already started one. She said she had to school Gensler. Wrong. Well, let me tell you something. It's about time somebody start coming at this bully agency, the SEC, and Gary Gensler. And it's not just Ripple anymore. And if you ever wanted to know that this is more about crypto than it is one company or one asset, you just found out through this thread with Brian Armstrong and the threat from the SEC that they will sue them if they start to offer DeFi. I made this point a long time ago because the SEC is looking to create a standalone office to conduct investigations into crypto and other digital assets and like DeFi, right? So be well aware of what's going on there. And this is Gary Gensler himself telling you what his plans were. And back when this was going on, I was talking about the idea that we're going to see the majority of these assets become digital asset securities, and they tuck it in the framework that's already here, because writing a brand new framework for a brand new set of assets in the market, right, a new asset class, runs the risk for these lawyers to mess it up. But they're already messing it up, right? So the reality is you can see the approach. The approach is, look, we already have a securities market. We already have a securities framework. We already know what compliance is for securities around the world. So if we just declare most of this market digital asset securities, we don't have to worry about making a mistake on a new law or a new rule, because the rules are already in place. So if we can find a reason to deem the majority of these assets digital asset securities, we pretty much don't have to change a damn thing now, do we? Except giving more revenue and more power to the SEC.
I think that we need greater investor protection there. And we don't have a federal regime overseeing the crypto exchanges. So if an investor wants to trade on that Bitcoin, understanding it's highly volatile, highly speculative, but if they want to trade on that, that we have in place some investor protection. And that's what I was saying, I think, is a gap in our system right now.
And that gap he wants to cover with the SEC's purview.
But it's a gap in our system that needs to be addressed by whom? Is that something that Congress will have to address? Because it's very possible Congress won't address it. And if they don't, is that something that you think you have an angle to address?
Well, I think that as it relates to Bitcoin, and I'm not speaking to all the other tokens right now, but as it relates to Bitcoin, while our sister agency, the Commodity Futures Trading Commission, has some limited anti-fraud and anti-manipulation authority, there's no federal authority to actually bring a regime to the crypto exchanges. Whether it's stock exchanges or futures exchanges, there's regimes that were put in place in the 1930s to help protect against fraud and manipulation on the exchanges and protect the integrity of that. And I think that's really something that we'll be working with Congress, and if they see fit, to try to bring some protection for people that want to invest in this speculative asset class.
And there you have it, ladies and gentlemen. He just told you what we've been talking about on this channel, is that he wants to see these exchanges and this DeFi overseen by the SEC, just like you see in the conventional markets with the New York Stock Exchange and NASDAQ and everything else. He wants to see these exchanges. So that means you're going to need a dealer broker license, right? That's what you're going to need. You're going to need a dealer broker license in order to move forward, which is going to put all the exchanges out of compliance. And now they're going to have to get in line. And then when they get in line, what do you want to bet? You're going to see the largest banks and investment banks in the world start to pick off the exchanges that they actually want. And we already know Coinbase is partnered with Fidelity, right? So I wouldn't be surprised if we saw the Goldman Sachs and the JP Morgan pick up an exchange if this takes place and we see these exchanges forced to get a dealer broker's license in order to continue. Once they get in line, you're going to see the big banks of the world start to pick off the exchanges they want so that they can become the ones that make the money off of this stuff. Did you ever think it was going to go another way? Because I didn't. That's going to do it for me. Make sure you hit the like and subscribe, leave a comment below. This may be one of the most important videos we've ever made here on this channel. There is a change that is going to come, and it doesn't appear that there's any good guys out here that are going to stop it. That's the problem we're having right now. Check out all the links in the description and comment section. They're trusted, vetted links of products and services I use each and every day. I'll catch all of you on the next one.